New this morning, we got the guy at the desk. SoFi launching crypto trading on its platform. Joining us right now, first on CNBC, is SoFi CEO Anthony Noto in town. It's nice to see you, sir, in person.
Good to see you as well.
Okay, so what's going on here? This is a big deal.
Yeah, this morning,
a very big deal for you.
It is a very big deal. It's a big day and a big milestone. Reverses the course of time.
It does.
We've wanted to be a one-stop shop for all your financial services needs, and one of the holes we've had for the last 2 years was in cryptocurrency, the ability to buy, sell, and hold crypto. We were not allowed to do that as a bank. It was not permissible. But in March of this year, the OCC came out with an interpretive letter that it's now permissible for banks like SoFi to offer cryptocurrencies. So this morning we're launching, as the only national bank, the first and only national bank, the opportunity to buy, sell, and hold cryptocurrencies like Bitcoin, Ethereum, and Solana.
So I was going to ask, are we just talking about 3 for now?
We'll expand well beyond 3. It'll be a pretty broad assortment. We try to differentiate on being fast, having broad selection, great prices, ease of use. So we'll try to give members, SoFi members, as much selection as they would like.
And what's the difference between going through you and going through Coinbase or going through Robinhood or somebody else?
Yeah, there's a couple of really big differences. First, we're a nationally chartered bank, which means we have the infrastructure, the processes, the financial conditions that provides the safeguards that a consumer would expect from a bank, which is going to allow us to scale responsibly. The second thing is, because we are a one-stop shop, you can do all your banking, checking, and savings at SoFi, your borrowing and your investing, and now crypto. And one of the unique things about that is when you come to SoFi and fund your crypto investments, you'll fund them in a SoFi checking and savings account. That checking and savings account's deposits earn interest.
Say that again. You're going to fund it with crypto?
You're going to fund
your checking account.
You're going to fund your checking account with cash.
Okay.
And then when you buy Bitcoin or Solana or Ethereum, the money will come straight out of your checking and savings account. So when you're not putting cash to work, it's not sitting in an account that earns no interest, and it's not sitting in an account that's not insured. So the money will sit in an FDIC insured account. Up to $2 million is what we offer. And when you buy, it will instantly withdraw from that account and send it to the marketplace.
Okay, so here's a question. This seems novel in this moment. If we're sitting here a year from now, given this OCC decision and every other bank in this country, how novel will this ultimately be? Meaning, do you imagine Bank of America and JP Morgan and every bank, Wells Fargo, all the big banks and everybody else will be doing exactly this?
I don't. And a couple of reasons for that. We're the only digital one-stop shop. They do not offer the breadth of products that we offer across borrowing, saving, investing, protecting, and spending. So we have the ability to not just buy cryptocurrency, but we're now providing the ability to send payments internationally via the Lightning Network, which is a crypto network, and we'll add others to that.
Why can't they? Why can't some of these sort of more traditional legacy banks do the same thing?
They'll have to answer why. I fundamentally believe that we put the member at the center of that what we do, and we focus on these things that are activities to do with your money, not products. And so the SoFi Money account is an account that you can use for international remittance, you could use for self-serve wires, you can now use for crypto buying, you could use for paying friends via an email and Zelle. And so the whole idea is to leverage technology to make moving your money as easy as possible, but also doing all the other things you need to do to get your money right.
Let me show you. Can we just put Bitcoin up on the screen for a second? So we're at about, 105,000 today? I don't know where we were.
104 and change.
So what do you make, though, of how your new your clients who may be buying this should be thinking about this? Should it be digital gold? Should it be a speculative asset that they're sort of trading? What do you think of this?
The first thing is we've asked our members what they want, and 60% of them have said they would like to invest in crypto, but they want to do it from a regulated entity like a bank, and that's what we are, and so that's one differentiation. The second is it is a highly risky asset. It should be a very, very small piece of a total portfolio, and people should dollar cost average into it and make sure they stay very diversified. Because it is risky and it is volatile, you could lose all of your money, and we want to make sure that our members understand that. But they do want exposure to that, just like people wanted exposure to Amazon back in the mid-'90s. Risky, now it's $1 trillion company.
What is your exposure to all of this in terms of the risk to the system? If everybody were to do what you're doing, what kind of exposure would ultimately the taxpayer have if all of this, if Bitcoin goes from this to, loses 50% of its value?
It's like any asset. If it becomes overvalued, that risk increases increasingly over time. If there's a lack of liquidity, that risk increases, and those are all things members should understand. We provide education on the platform. In fact, when we used to provide cryptocurrency investing, we would have a warning just before you hit buy that said, this is a risky asset, you could lose all of your money. In our press release, we say that exact same thing today. So it's just another asset that's not proven over the course of centuries, that will take time to level out and become more stable from a price and valuation standpoint.
Can I ask, does the Noto family invest in crypto right now?
Yes, we do. I have about 3% of my investable assets in cryptocurrency.
Mostly in Bitcoin, or what's the...
Mostly in Bitcoin.
And were you early?
I was not super early. We've done perfectly fine. We have exposure to it because, one, I believe we're investing in a technology, not in a currency. The analogy I use with people is, imagine if in 1990 you could have bought a piece of the World Wide Web through some coin called the World Wide Web coin. It's very similar to that. These are networks, they're communication networks used for payments and other applications.
What do you make? We were talking to Kathy Wood. Was it just this week? Last week? I guess it's Tuesday. Last week we were talking to Kathy Wood. And she, has had a very sort of sky-high valuation for Bitcoin. I think it was $1.5 million she thought it could ultimately get to. She took that down, interestingly, last week and suggested that the success of stablecoin is so much higher than she thought that in some ways stablecoins for transactions could ultimately crowd out Bitcoin that might have been used for that.
Big picture, we believe blockchain and cryptocurrencies are a supercycle, technology supercycle, just like AI, and it will be pervasive across all the financial system. Stablecoins is one example that will fundamentally change payments. SoFi will launch SoFi USD, hopefully in January. That will be backed dollar for dollar by reserves. Because we are a bank, we'll actually put the dollars in our Fed bank account, so we'll have no liquidity risk, no credit risk, and earn Fed funds. That's a really attractive vehicle for people to use digital currency for, and that will compete with other digital currencies. It's not clear who will be the winner. Stablecoins are one example, but if there's a huge proliferation of stablecoins and they don't have the liquidity that I mentioned, they don't have the credit risk and duration risk, that could become a very risky asset also.
Should we worry about stablecoins in the following way, which is that hopefully if the stablecoins are backed by something meaningful like treasuries, that effectively takes treasuries out of the game to be lent in a different way?
Yeah, I actually worry quite significantly about stablecoins from operators that are not banks. Where are the reserves sitting? Is there duration risk for those reserves? Is there credit risk for those reserves? Are those reserves bankruptcy remote? SoFi, the answer to that is zero credit risk, zero liquidity risk, and working on bankruptcy remote. That's three elements that you have to think about with whatever stablecoin you use. Just because it's backed dollar for dollar doesn't mean those dollars will be there when you try to liquidate, just like a money market fund that breaks a buck.